Hello friends, I'm going to be talking about how best to use moving averages, whether it's SMA or EMA. What are the tips and tools you can use when using moving averages to help you get most out of what you plan to do with the moving average? So, couple of points. One, moving averages are never to be used in a ranging market. They are not going to help you at all. Let me show you what I mean. Can you see here? Prices in a range moving up and down, crisscrossing the various EMAs. I've got the 9, the 20, the 50, and the 200. So they are going up and down, up and down. So if you took a long on top of the moving average, you got stopped out, or there are chances of you getting stopped out because the trend itself is not clear. The moving averages are going up and down like waves in an ocean, and so are the price candles. So if you see here, price is going up and down, all the moving averages come together, moving average gone down a bit, gone up, broken the 200 resistance, it was a false breakout, consolidation back again, then again up, then again down. So either you took a short uh, or you took a long here. Basically, you would have been disappointed because the price is moving crisscross. So never use moving averages when price is in a consolidation. You see here, price is doing nothing but consolidating, right? Price is just consolidating here. Now, because price is consolidating here, is going up and down, don't use them. You need moving averages to show you a clear trend. If you see here, the trend is now becoming clear. Prices are moving up. Moving averages, there is a gap between the various moving averages. So always use moving averages there is a when there is a gap, when there's a clear indication that the price is either going up or down. Since we are talking swing equity, we'll be talking only about longs. If you want to think shorts, then either it's intraday equity or it's going to be futures or options which you can short. So, we've seen that we shouldn't be taking moving averages when the market is in a trend. So let's look at some few stocks here. Let's look at Nestle India. If you see here, there are moving averages and they are all bunched together and price is basically in a range here. So nothing doing here. But if you see here, this section, where price has broken up the resistance on a daily time frame, it's even come to retest. You could have taken a long here and you would have been fine. The stop loss below this, you would have been in the trade for a long time or clocked out earlier once you had your profits. So unless there is a clear trend, there's no point using moving averages. We just use moving averages to find out the trend. If they go up and down like this, that means the market is in a range, is range bound, price is range bound, and you have to be very, very careful if you plan to trade in such a range. So if you look at Nestle here, there was a clear trend here, it hit the resistance here, and then it's come down here, then gone up, then come down. So if you see here, this entire area is in a range. Very, very dangerous trading here unless you plan to trade only for a day or two, sort of, if you want me to call it, let's call it swing scalping, then you can do that, but otherwise not much help. Let's go to one Sona Comps. If you see Sona Comps, right now this was a range. You see here I have a resistance which has now turned support, drawn up. I've got supports drawn up. So here market was in a range, market is going up and down. So the EM is not doing you any favors here. But and even the trend is unclear. You see this high, then you see this low, then you see this high. It's not until here that you get a clear range where you have a higher high, and compared to this low, this is a higher low. Then again market has gone down because there's a double bottom here or a triple bottom, if you will. Market has gone down below the 200. When price goes below the 200 on the daily candle, or on any time frame, it means that the price is in a long-term downtrend. But it has quickly recovered. This was just a spike. So now again, price has gone up above the 9, the 20, the 50, and the 200. So we are looking good here. But again, if you see here, there is too much of consolidation, up and down, wide swings going here. So it would not be advisable to trade here. And besides looking at the moving averages, you must also remember that if you that there's no best EMA for a stock. By and large, most stocks will respect the 9, 20, 50, 100, and 200. But o- over a period of time, you will find that the number of touches given to an EMA will basically solidify the relationship of the EMA to that particular instrument. Now, Dani Port Special 200 is the long-term moving averages. That's fine, and it has touched here once. It has touched here twice, and there was a huge stop loss hunting and a huge spike here, probably because of dividend or some news catalyst on this particular day. It almost came close to touching, but then it bounced back slowly. It didn't bounce back on the same day, but it did. And now you have a reasonable candle. You have a reasonable candle, probably because of earnings coming up. And if you look at it, let's see if there's a news. See, 20 hours ago, this is a news catalyst, right? So when whenever you're going for an EMA, you have to see the relationship that particular instrument has with the EMA. Now, if you see here, the relationship here of Cochin Shipyard is more with the 9 and the 20, and very rarely with the 50. So price comes back here, and then price bounces back of the 9. Sometimes it touches the 20. So you must also be careful that if the price is way too high above the EMA and there is too much of distance, then you should be very using that, because the price can come back to the EMA, because this is called mean reversal if the price is too far. Luckily here, you see it doesn't go much, it comes back, it's gone back even to the 20, gone back just a bit, come back to the 20. Let's see if I can find something which has gone too far from the 9 or the 20 and then come back. Uh, Again, these are all the 9 and 20 closely trailing the price. So there is not much chance of mean reversion when it's already closed. See again what I meant here. Price is crisscrossing up and down, so in a range bound. The stock is range bound, and you should not be basically using the EMA for taking trades. Let's look at JSW Steel. Again, there are deep pullbacks here, but the price hasn't gone up above the 9 or the 20, but it's still pulling back here. So this, although it's slowly, steadily inching upward, there are deep pullbacks. So this is not the kind of stock you want to be in. Whenever we're looking at a stock, you need to be careful as to be sure of the fact that there has to be a steady trend. If you look here, just look at the State Bank of India, right? Price has gone up, such a big, huge candle. Let's look at this candle. Such a huge, big candle that we see here, where 14.4%, probably because of news catalyst or something. I'm not getting the example that I want to show you here, but if the price is here, can you see here? Price is way far above, or very the distance between the 9 EMA or the 20 EMA is too high, like here, 20%. Then what happens? See, one after another, the candles come back, and not only do they come back to the 9 and the 20, they go all back and hit the 200. So, this is a perfect example. Do not take entries when the price is too far from the EMA, because the EMA price candle and the EMA is like a rubber band. You pull like this and like this, it will come. So, be careful that whenever you go for an entry, either short or long, the candle has to be preferably close to the EMA, and if it's too far, no matter how good the candle or how good the pattern, please don't take it. because the chances of a rebound are very high. So you learned here basically that don't buy when the price is too far from EMA, as the price can pull back to the EMA, which is called mean reversion, the rubber band effect. There is no best EMA. Some instruments will hit the 20 EMA and bounce off regularly. Some will hit the 50, some will hit the 200. And you have to avoid using the EMA in range bound markets like this, where EMAs are bunching, because there'll be stop loss. You will hit stop losses on either side and not make any money at all. So I hope you had a good learning. If you like what I'm teaching you, please subscribe to my channel. Forward it to people who are interested in learning how to trade. Hit the bell notification for getting new videos. If you have any questions, please write so in the comments. If you want me to make a video on any particular topic, do let me know as well. I wish you all the best in your trading, and I'll see you in the next. Thank you for watching.